Good morning, good evening, good afternoon, trader Steve here at Logic FX Trading, and welcome to our trading room recording on Friday, the 9th of July 2021. Okay, yesterday I got up and running again, guys, and today will just be the same. Start to develop ideas as we go through the next week. And that's the way it has to go, guys. You can't just come along, look at something, and immediately go, oh, I'm going to risk my money in that. So we're just building a picture, looking for opportunities, trying to understand the reason why things are doing what they're doing, remembering that we're looking for trends rather than exactly what's happening today. You listen to Bloomberg and they're going on today about how the dollar's clawing back some of yesterday's losses. It's still in an ending diagonal as far as I'm concerned, guys, and I'm looking short. Does that mean I'm right? No, it doesn't mean I'm right, but there's probably higher probability that it's going to go short than long in my book. Okay, but that doesn't mean you throw your account at it. It means that you trade it very conservatively and you get stop losses in case you're wrong, guys. Okay, because it's all right to be wrong when you're trading. In fact, you're wrong a lot of time when you're trading, and that's okay, guys. There's no crystal ball out there that anyone who trades or anyone who invests knows. In fact, the more money people have, the longer their outlook on trends and investing is. But what we're trying to do is trade rather than just invest. In other words, we're taking the same money and trying to turn it over and over to get a better return than what you would get simply by following the stock market or the dollar or whatever it is that you want to invest in. Okay, guys, let's get on with it. Today, a little bit of surprise there. Inflation rate out of China come in at 1.1, which was 0.2 below forecast. A little bit of indication of what we were talking about yesterday was that the Chinese economy didn't seem to be growing, growing as fast as what everyone would like it to, which could be a problem because it's kind of the driving force of the world economy at the moment. So are we starting to see a few little problems? We don't know yet, but keep our eye on it. UK GDP 3 month also come in a little bit below forecast. Yet again, an indicator that things aren't what we expected them to be. Remember, if we go back this time last year, by now we thought the world would be cured and would be back to normal. And at the moment, all eyes are on the Delta variant, which is running rampant around the world. Fortunately for people who are doubly vaccinated, it doesn't seem to mean hospitalizations, which is the big key, because once you get hospitalizations, you get your healthcare system overrun, and then you start finding people not able to be treated, and your death rate start going up. So at the moment, it seems like we're not getting the figures that we got last year, which is the reason why the UK has kind of possibly taken the lead and said, listen, we're ending lockdown rules in 10 days' time. That's not where I live. I live in Ireland, but Northern Ireland to be precise. And we've got our own rules over here, but they'll not be too far behind the UK or England's rules, should I say. Okay, let's move on. GDP year on year, UK came in at 24.6, slightly down on what was forecast. Remember, there's base rates coming in there, guys. This is only 24%, because the economy was basically dead this time last year. So you're getting the growth since this time last year. It doesn't mean that the economy's grown 25%. New on loans come in slightly above forecast, which according to the system is good. Not entirely sure. Right, we'll leave that one for the meantime, guys. They're supporting the economy, basically, to try and get it running. Cattle employment and unemployment coming out later today, and then the ECB monetary policy meeting accounts. But as we saw yesterday, ECB seemed to be following a pretty similar track as the Fed, in that they have a 2% target for inflation, and they'll let the economy run hot a little bit. pot by continuing to print money and continuing to have interest rates the cheapest they've ever been in my life, guys. So anyone that's out there borrowing money, well done. Anyone who's saving money, waste of time. Okay, and then tomorrow's Saturday, so we'll start again on Monday, folks. That's it for the economic calendar. Nothing too much to get excited about. Remember, we're just building up a picture of what's going on, and we look through this every day, and we look through it, 7 days in advance. We'll do that on Monday. To pick out those bits of information that might just move the market, guys. Okay, let's get on to the charts. NASDAQ, we'll take it down to 1 hour, guys, and we'll have a look and see what happened yesterday. We got this drawdown yesterday, which is pretty nasty, guys. My account get drawn down a little bit more. We're down over 1% now for the month. It's normal, guys, but I don't like it. Oh, I hate it when I get drawn down, but there you go. It's part of the game, but, So what are we in? Is this the start of a deeper decline? Well, we don't know that yet, guys. We just got to keep an eye on it. This certainly could, do something like that and then start to recover again. I'm not saying it's going to do that. I'm just saying be aware that it could do that. And the important thing about being aware and looking at the charts is, guys, is that those days that the world seems like it's falling apart, if you can get it into your head that, yeah, well, it's not great, the account's going down, but we're in a correction and it'll come long after that, then it just makes life a little bit easier than if you just watch the numbers in your account and you're down, and you're down and you're down and you're down. If you look at the patterns, it can give you a better idea of what's going on, and therefore you can react better, guys. We fully expect corrections because that's the way the market goes. This was our last run up, which we just copied and pasted. Obviously it's not going to be exact, but when we were back over here, I copied this and pasted it in here and said, listen, this is the way I expect the NASDAQ to run over the next few weeks, which is what it's done. So I'm not suggesting that it's going to do that, but you wouldn't be surprised if it did, guys, because that's what happens. I can actually, that's been copied from over here. Where was it? It was this run up. I can remember trading that and thinking it was the start of the big correction. And then this was a bit of a nightmare for about a month. And then off we went again, guys. We predicted that actually quite nicely. The only thing that didn't happen here, from an Elliott wave point of view, let's go out to the 4 hours. I'm doing a little bit more explaining here than I normally would, guys, but I know I'm putting this out on YouTube, so there'll be new people coming along. What we didn't get right here was that ordinarily when you get an ABC correction in Elliott, you would expect to see at least to come down to, this point here, and often a little bit further. So when I saw this double top and it started to drop, we were expecting it to come down deeper. Thankfully, it didn't. And as we got this pullback here, that's where I said, hey, hold on, I think this is over, guys. We're not going to get that deeper pullback. Let's start trading up, which is what we did. Okay, so where are we today? I wouldn't be surprised if we got a deeper pullback. It doesn't mean that you've got to suddenly react to it, guys. It just means be aware that if it's drawing down, it could well just be a correction within this move up, guys. Okay. At some point, we will get a deeper correction, but trying to time it would be, it's pretty tough trying to time it, guys. And as I said yesterday, I've got 50% of my account on cash at the minute. Just didn't get it in because I wasn't trading stocks last year. We were trading currency only last year. And then because the account started out as a training account and we were just adding little bits of money every month and building it up and showing you how to stay in the game with a small account. And then I got a bit bored with that. So January, we put a load of thousands into it, guys, and allowed us to start trading stocks. There just wasn't enough money in it to trade currencies last year, or stocks last year. So we were trading currencies and yeah, it was tough. Okay. Dow Jones still running flat, guys. Wouldn't be surprised if we got a bit more downside to it. By the way, today everything's looking a little bit rosier. It looks like we're getting a bit of a push up today. That little move there's today, I think. Let's see, that's the 8th. So we had the drop yesterday, and then a little bit of a comeback, and then another little drop, and we started to move up. Now, all of the European bourses or markets, let's say, call them, they're all green at the minute, guys. So hopefully we get a little bit of green in the Nasdaq today and claw back some of that money that we dropped yesterday. As I say, Dow Jones still looking a bit flat there. S&P had a little bit of a drawdown yesterday, but nowhere near as much as the Nasdaq. So nothing to write home about there just yet. The market's getting jittery, guys. There's more and more people talking about a correction. I don't think we're there yet. If you go onto YouTube, you can see an awful lot of people starting to talk about the crash and what to do about the crash. And I don't think there's going to be a crash. There will be a correction, guys, but I don't think there'll be a crash. And we'll talk more about that as the days and weeks go on. Nikkei, still in this corrective structure, guys, which we predicted from up here, and we're looking for it to break out long from there. UK's kind of been running flat for the last few weeks. French had a good pullback yesterday, but you can see how it's recovered this morning. Let's see if it breaks out and runs. Remember, I'm not trading any of these indexes, guys. We're just looking at this to give us a view of the market, the overall world economy, and the overall world stock markets, to build up a picture of what's going on out there, guys. German, same thing as the French, dropped like a stone and then is recovering today. It's still within that corrective structure, so there's nothing much to write home about, guys. And then the Chinese is continuing this drawdown. It's come into that level, could hold. I wouldn't be surprised. When we got this in here, I was looking for another leg down, because often you will get that, guys. You don't always get it. Elliott isn't painting by numbers. It isn't. You know, we label things 1, 2, 3, 4, 5 and A, B, C, but it doesn't always work like that. But what it does is it makes you wary. In other words, if you were here, because of the possibility of another leg down on there, you wouldn't trade it long, guys. You would just leave it alone. And if it gave you that, then the probability of going long from there is much higher. And when you started to see some movement in that direction, that would have been the time to get into it. So what do you do if it doesn't get there? Well, you have to leave it alone, guys. But there's thousands of things to trade, so you don't have to know exactly what's going on in every chart. That's something that when I was learning about it, it used to rack my brain that I couldn't see it. You know, you go on the Trading View and everyone's got every chart labeled, you know, this is an ABC, that's a 1, 2, 3, 4, 5 impulse. Guys, you can't trade like that. It's madness. If you see it, you see it. If you don't see it, don't worry about it. And that's exactly how I trade with this stuff. So we've had an impulse. We've had a correction, possibly, and this could well break this bottom to give us, oops, a little bit exaggerated there, to give us a zigzag, guys, and then off you go. Is it going to do that? Well, we don't know. But what I would do is I would just leave it alone. So if it continues on down, you're not caught in it. And then if you wanted to trade it long, at some point it will break out because we'll have that extended down. Just do a little bit of teaching here, guys. I don't want to spend too much time on this in here. This is supposed to be analysis. If it were to come down there, then look for the breakout, and then at that point, that's where you'd start to trade it. And I'm talking about any chart, guys. I'm not talking about specifically this one. But given that it's come into there, that could hold and it could bounce off that, guys. But don't be surprised if it dropped a little bit lower. Now, obviously, I wouldn't like to see it dropping lower because it could be infectious for the other markets around the world. But we'll see. Used to be the set of the if the Dow Jones, oh, if America, if America sneezed, the UK caught the cold. I haven't heard it for a long time, but that used to be what they used to say about and it could start to become like that with China. China sneezes, the rest of the world catches the cold. Aussie doing pretty much what the European markets are doing, just running a little bit flat there, guys. Oh, let's bring that back in. So nothing much here to look at, nothing much to get excited about, but we have to go through the routine every day so we don't miss anything, guys. Russell, this is small caps, US small caps, been running flat for the whole of, well, not the whole, but certainly from February. It's been running flat. I've been looking for it to break out, but it is entirely possible, given the strength of that move up, that we would get a deeper correction on that before it goes. See that, guys? It looks like it's kind of reached its range. You would not be surprised if there's a bit of a correction on it before we got any more growth. And maybe it just stays in there until that happens. Now, I'm not trading this chart, but given what we're looking at, if you were going to trade any of the stocks that are in this, you'd have to be very careful about what you're doing, guys. Okay, let's go over the currencies. Dollar on the 1 hour, I'm pretty sure we're in an ending diagonal here. Which is the reason why I went short on the dollar index yesterday, guys. I took two other trades yesterday we talked about, which were on the yen. And I made a little bit of money on them and then thought to myself, you know what, I'm not comfortable with this because they'd already moved. And I very rarely would I get in to a candle that's first of all moving, but secondly has already given you a move, because 9 times out of 10 what you'll get is something like that, guys. And then if you still believe that the trend's down, then that's the place to trend it from, up there, not from there. Now, I got in there yesterday. It was a little bit of a defensive move, guys, because I saw the markets were going to drop. Futures had already dropped. And I thought to myself, well, if it gets any worse, at least I can claw some money back from the yen, because if it was going to get worse, then the yen would get stronger. That didn't really happen. So it started to come back up. So I took 1.5%, 2% or something on the trades, guys. But it was just a little insurance policy. And then I didn't want it turning into something negative. So I was never going to let those run back into the negative. So I just got out of them. But that for me in the DXY dollar index looks like an ending diagonal, folks. Is it an ending diagonal? Well, we never know until they go. But, you know, we pointed that one out and eventually it went. And this is the thing with these guys. It's the timing. So often I predict things and then 3 weeks later or 2 weeks later they happen. In the meantime, my head's somewhere else. So that's another reason why we need to look at these every day, guys. So we predicted that ending diagonal there. Eventually we got our move up. It was actually a better move than we thought. I think we're going to get a move down in this. And this could be the start of a deeper move in the dollar, guys. But we'll have to see. We'll have to see, because we don't know what the Fed's going to say from one day to the next. And if they say they're going to tighten, then obviously you'll get more upside to the dollar. But listen, that move there wasn't actually on anything happening. That was on a rumor, an interpretation of what the Fed said last month, guys. So it could already be priced in. And often you'll get that, where they actually turn around and say they're going to tighten and the dollar goes off in the opposite direction to the one you would expect it to. And that's because it was priced in last week or last month. So I'm not saying that's exactly what's going on here, guys, but it certainly is something I'm keeping an eye on. I think this is going to go short. Euro US, obviously then I would think that would go in the opposite direction. Doesn't mean it has to, but of that ending diagonal there, look at the divergence there as well, guys. It's not as clear and obvious in this chart as it is over there in the DXY. Look at the divergence here. Let's take it out to the 4 hours. I think the 4 hours is better. Look at that divergence in the 4 hour. There's your first spike, there's your second spike, there's your third spike, and look at the divergence here, guys. This certainly looks like it's going to drop. I should put that chart out in TradingView. I haven't been putting many charts out this last year or two. Pound, obviously, same thing, guys. If the dollar goes short, you'll get that trade there. Aussie, be the same thing again. Similar structure, not as clear, but look at that again, the divergence between there and there. That's not exactly lower, but it's enough for me. I think that'll go long. And the New Zealand will always follow the Aussie, guys, so, or vice versa. So that would probably go long as well there, guys. CAD. Now, CAD took a bit of a battering because the oil price dropped yesterday. We'll have a look in a moment at what's going on with the oil. Didn't hear anything else about it. And I didn't specifically go and look for it yesterday. But, you know, it's been quite a good pullback. I wouldn't be surprised if this came off, but I wouldn't trade it just yet, guys. US, Swedish, yet again, we talked about this yesterday from a point of view of often it leads the way, guys. Let me bring this one over. You just steal that one. It's come into a little bit of a double top there. Wouldn't be surprised if it at least came, you know, back down into there. Maybe broke it a little. And then we'll see, has the dollar changed direction or not? Remembering, going back to DXY, this is the most important chart for currency trading, guys. From back here, we said it would run flat with potential little bit more downside. And the reason for the downside was that the amount of dollars that are being printed by the Fed and spent by the government with all these new policies that the Biden government's bringing in, the trillions of dollars that they're spending on infrastructure, etc. Given, you know, okay, it's over the next few years, but nonetheless, the money's going to have to come from somewhere, so they'll probably just print it. I wouldn't be surprised we got a bit more downside, and that's why I'm quite keen to take the chance to short DXY from here, because if it turns out that it, that it at least tests this bottom, that's a good trade, guys. And if it turns out that it goes further, now I'll be honest, I'll probably be out of it by the time it got back down to there, if it were to get there. But that's the reason that I'm taking the risk on that trade, because there's potential more downside to it. And then US yen. Well, there was the drop in the yen yesterday, despite the fact that the dollar had moved long against everything else. Sorry, just wrecking the place here, guys. Let's just move that dust bin. Okay. Yeah, well, that's an example there. If we take that down to the 1 hour, guys, that's an example of what I was saying earlier about not jumping into, moving candles. I think yesterday we were around there somewhere, and as it turned out, there's maybe a bit more downside to it. But there you go. You would have been right back to zero, or possibly if you got in too late, you would have now been in the red with that trade had you tried to trade it short. So you're always better waiting for a setup, waiting for the initial move. If you've missed it, obviously if you've caught it because for some reason you were short from up there, then brilliant. But once it's happening, you then need to have the patience to wait for it to come back, maybe give you a setup. Maybe the reason that happened, it's still on. The motivation for that to happen is still around, and therefore you get the second bite of the cherry over here. But it does take patience, guys. Yes, China. You can see that's broken that top there a little bit, guys. It's a difficult one to call this because I've kind of got it in my head that the dollar's going to go short. But I think the Chinese yuan's also going short, folks. But I don't trade this pair. Yet again, just keeping an eye on it in case there's an obvious setup on it, and also just to give us an idea of what's going on in China. Yes, Swiss. Well, there you go. That was the move yesterday. Hasn't come back up as much as the yen. Is that the start of the drawdown on this the Swiss US dollar or US dollar Swiss? Possibly. So I'll keep an eye on this. If this sticks around here into Monday, Tuesday, and gives us a setup, maybe we'll look to trade that down, guys. Particularly if gold was to go long, because the Swiss is pretty 25% of the Swiss currency is based on the gold price, guys. So if gold goes up, the Swiss usually moves with it. Gold, it's hung around there yesterday, guys. I didn't get any big boost off it yesterday. I was hoping with the stocks all dropping yesterday that would maybe get a bit of a move in gold, although it did say that it wasn't holding my breath for it. But at least it held its value, and it's holding up here, guys. I suspect it's either going to run flat in here or it could break. Now, I have listened to quite a few it's going to say experts, but people who have been trading gold a long time, let's put it that way. And when we got this move and we were in here, they were basically saying it's the same old thing, guys. It's the ABC, isn't it? They were saying, well, certainly this could draw down further. And of course, given that I've probably got about 5% of the account based on gold, I was certainly hoping we didn't get that. Can that still happen? Yes, it can. Anything can happen, guys. But I'm hopeful that this little pullback here is the start of it, starting to climb back up again. But look at what happened over here, guys. Sometimes you don't get those drawdowns immediately. We had the drawdown there, and then for I don't know as long as that was that a month, hung about sideways, and then off it went. Now you wouldn't want to be caught in that, guys. This is a 4-hour chart, remember. So if this were to do something like that, I might just bail on it. Of course, the problem with bailing is there's two strategies here, guys. Either you put a tight stop loss and you take maybe a 10% loss or something, you get out, or you hang in because your belief is that in the long term, the trend's long, and then you add to your position. Well, that depends how much spare cash you have and what percentage of your portfolio you've already committed to whatever it is, in this case, gold. And I feel that I'm already pretty highly committed to it. I think it's about 4%, 5%. I'll have a little bit. Let's just go and look now. Oh, it'll not all be in the one place, unfortunately, because it's spread out. 1.56% there on GDX. I got rid of, GDXJ. I got rid of GDX yesterday. Might have been, what day is this? Friday, might have been Wednesday night. I got rid of GDX. It had been up in the green. It was coming back down to zero, and just thought, well, I'm not going into the red with it. Kinross Gold, 4%. Oh my goodness. So we're already on 5.5%, guys. And then we've got Wheaton Precious Metals, 2%. Ugh. Over 8%. Okay, so you can see that I don't want to put any more money into gold, guys. We've got 8.5% in gold there. So you wouldn't want to risk any more than that. Okay, maybe you'd push it to 10 at the most. Silver looking very similar. Look, there's the drop. There's a little pullback. Could well come down to here if it came down to here. I've only got a very small amount on silver, but if they added the silver and gold together, it'll probably come to 10%, guys. So it's a pretty big insurance policy, so I'm not sure that I've got much left in me. If it drops a bit more, maybe I buy a little bit more silver, guys, and then we're looking for the move back up. And even if it just came to there, that's some move, and look how long it took that to get to there. And the truth is, I'd probably be out and then try and get back in again, Bitcoin still just hanging around, guys. And as we talked about at length yesterday, if it were to come down into this sort of level here, guys, maybe I'd be a little bit more interested in it. Oil, Make a little bit of recovery this morning. I did say it would probably stay in a range here for a while. I don't trade oil; it costs too much to trade oil. But it's a good idea to keep an eye on it because, yet again, it lets you know what's going on in the world economy. Every dog has its day in trading, guys, and you need to know what's going on with them all so that when it becomes oil's day or it becomes gold's day or whatever it may be, you're there, you're on the ball, you know what's happening with it, and therefore you have a higher probability of actually being able to take advantage of it. Euro CAD, well, we had that big move up on the Euro CAD during the week. That was the 6th, 7th, and we're through to the 9th. What I would have to see now would be something like that, and then before I would trade it, I would also have to see the oil price at least moving flat, if not dropping a little bit, and I'd have to see the dollar coming off, guys. And the thing is, with the dollar drop, the oil price goes up because obviously it's priced in dollars. So I'm not convinced by that. Euro Oz. Well, that's good to see, but it shows you that move was on the euro and not on the Oz. I'm not a great believer in the euro either at the minute. Yeah. Look at this structure here, guys. That's not really something you want to trade, is it? You want to trade things like that. Trying to trade impulses, guys. This at the minute's moving up in a big corrective structure. Now, if you were really confident that it was going to continue like that, then each time it drops, you could trade it back up. But that's not where we are at the moment. I mean, the one of those that we traded last year was just jumping ahead a little bit, was the Aussie CAD. Or not the Aussie CAD, the CAD Swiss. Oops. Which was back over here. And I did trade this. I traded this a lot last year, guys. And I was jumping in and out of it. And every time I got 5% on it, it was going, right, that'll do me. Because it was, because it kept dropping and then got up and dropping. Because it was trading a corrective structure. So I was just taking 5%, and then when it dropped, getting back in. The problem with it was when it broke out, I'd already taken my profit on that particular 2 or 3 trades that I had on. So I actually missed that. And that's, sometimes that's difficulty with trying to get too smart, trading, jumping in and out of things, because then you miss the big move, guys. But nonetheless, it was I'm pretty sure it gave us the best return last year. How can we do this way? Go to history and then go for the year and then do that. Ooh. You can see I haven't been trading many currencies recently, guys. That's a year, isn't it? Well, I've got something down here. It's maybe in the way. That's what it is. Haven't been trading currencies recently. New Zealand CAD, 100% correct. Only did one. CAD yen, 85% correct. Did all right in the CAD last year, guys. Aussie CAD, 66%. Obviously got one of them wrong. Well, there it is. 35 trades, 100% correct. But it only made 3.72%. But the fact it was 35 trades means that there was a lot of money put through it, guys. And averaged out at 3.72. And that's because we were trading that correction. But 100% with 35 trades, that wasn't bad. We can go and look at them. 5%, 10%, 5%. 6%, a lot of smaller ones where you'd been up and they were coming back, and I just take them off if it looks like they're going to go into the red, guys. We did all right with that last year. So the reason for showing you that is to show you that you can trade a corrective structure successfully, but you have to know the fundamental reason why it's doing what it's doing and know that the trend is that way. Now, you probably could have got away with trading it the opposite way, but I like to trade with trend so that if you do get lucky and it breaks and you're in it, I was just a little bit unlucky that it closed the trades and then couldn't find a way back in, and then it was too late, guys. Okay, so Euro CAD, Euro Oz, Euro New Zealand, just trying to find my place here, guys. Euro Swiss, Euro Yen. Okay, so now, of course, if I had been a bit braver with that CAD, I would have made a lot more money. Not necessarily percentage-wise, but there would have been bigger position sizes on it. So that's back down to your trading strategy, guys, not just your analysis. Okay, let's just see how this runs. It's on 4 hours here, so let's say there's a bit more downside to it. And then when things start coming right again, you should see this go long, provided to do. If we get a bigger correction in the markets, let's just look at the NASDAQ. If this turns out to be the start of a deeper correction, within this, we're not looking for it to come down here, guys. But if it turns out to be a deeper correction, then we will see more upside to the yen. See that gap up, guys, on the yen. If this continues up, the reason it continue up will probably be because money's moving out of the stock markets. So it's not necessarily good for us, but if that happens, then we've found something that we can trade. So if we come back over here, can you see how things are starting to add up? Because we talked about this yesterday. In fact, we talked about this. We've been talking about this structure here for weeks, looking for it to break out. Now, I don't know if that's the start of a breakout, guys, but it's certainly pointing in that direction. Certainly pointing in that direction. So that's something for us to keep our eye on. So Euro Yen, if that's true, maybe we get a bit of a pullback and then this continues to fall. Euro Swiss, it's still within this structure, which looks like a huge corrective structure that wants to go long at 78% or 78.6% drawdown, guys. Ordinarily, if you were just looking at this technically, you would certainly have a look at that, wouldn't you? But it's the reason why that's dropped that concerns me. So let's just hold on to our horses into Monday, folks. Pound CAD, as we said, yes, if it gives us a setup, maybe we trade it long. Pound Oz, it's a corrective structure, guys. Yet again, I haven't been trading it. I'm not about to start trading it now. But if it dropped back down within this, maybe I'd look for a trade up there. And it would be the same with this, because the New Zealand and the Aussie tend to run in tandem, guys. So in other words, if this dropped back down, now, hold on. I want to point something out here. I can't remember when I drew this, guys, but I know how I do my analysis. When you're here, I would say, guys, if this comes back into trend, there's your opportunity to trade it. So I can't remember exactly when I drew that, or even if maybe drew it yesterday to try and explain this same concept. But I'm pretty sure it's from a while back that when we were there, I said, if we get to there, there's the trade there, guys. Have I taken that trade? No, I haven't. Now, I might have talked about this yesterday as well, because this looks like it broke out yesterday. The 8th it did, it broke out yesterday. The reason I didn't take it, guys, is because I wasn't paying attention to the currencies. The only thing I've been watching for the last couple of weeks, because I've taken a break, obviously you don't stop watching the market. You know, any chance you get your phone out and have a little look. I was only keeping an eye on stocks. I wasn't going through all of the currencies, guys. But it's nice that we've at least analysed that from there. Said if it comes down into this trend, the next trade would be long. So at least if you identify things and you get them right with your analysis, it gives you the confidence then to trade your analysis, guys. So it's good to see that even though we didn't trade it. And for you guys, it shows you that, you know, that I do know what I'm talking about. And it's been a long time in the making, guys. I've been trading for years. Sorry, investing for years, trading for about 5 or 6 years. And the difference is buying stocks and letting them sit there, and then with trading, we're jumping in and out. Okay, pound Swiss, we had the big move in the Swiss yesterday. It's come into there. Potentially the same story, guys. But do I have the courage at the moment to trade that? I don't. Until I find out, you know, until I find out whether this move's over. Because it was a pretty sharp move. But look at that one there, guys. Could just end up running flat, but then if it's running flat, you trade it up, get out of it, let it drop, trade it up, get out of it. Pound euro, I tend not to trade this, guys. But yet again, you can see with how it's been trading, hindsight's a wonderful thing, of course, guys. But the way it's been trading, if you bought it every time it dropped, you know, and you had the patience, and you were taking small profits, you know, maybe a 5% return. I don't know if you'd get 5% in there, but maybe you would with a bit of leverage. Is the next move up to there? Possibly. I'm not going to trade it, guys. Pound yen. Yet again, guys, there's the trend. Up it comes, corrects back down. Is that the next move? And am I brave enough to take it? I'm probably not at the moment because of the dangers of that. Because if this takes off, then that pound yen will go in the opposite direction, guys. And there, for that reason alone, I'll not take that potential trade. We'll let it develop a little bit. Aussie yen, same thing. Well, what I said yesterday with this, do you remember I got into this yesterday? And then I took my profit. And there's the reason why I took my profit, because I said to myself, listen, there's only one thing that this is going to do, and it's going to correct. Now, whether it looks like that or whether it looks like that, you understand what I mean by that. When we draw that, guys, what we mean is there's your impulse. There's some form of correction, and sometimes it'll be lovely, and then if it breaks out of that, then we trade it down. That's what we're looking for there. Now, does that mean that that's definitely going to happen? No, it doesn't. What it means is that's what we're looking for. And if that happens, then we potentially could take a trade down. If that doesn't happen, then obviously we're not in it, so it doesn't matter. Okay, so we don't need a crystal ball, guys. We just need a system. So what could happen to this? Well, potentially it could do something like that and start to move along. But that's not what I'm predicting. I'm not going to predict anything with it at the moment. We'll wait and see what happens with the markets. Whether yesterday's drawdown was just a little bit of a blip or whether it's going to turn into something bigger. Turns into something bigger, we're into the yen. If it doesn't turn out to be anything other than a blip, then we can start to trade the yen back up. But let's give it a little bit of time to find out. Aussie, New Zealand, I love trading this pair, but at the moment, I'm not convinced by it. I said when we got that move there, I thought that was the start of a deeper move. To see that zigzag, potential zigzag there, guys. So I thought there might be a bit more downside to it. We didn't get it and I didn't trade it, so it doesn't matter. But yet again, this is a move up. That looks like a nice setup. It looks like it's pointing in that direction. Do I have a fundamental reason why that would happen? At the moment, I don't. And I like to have a fundamental reason, in other words, what the trend is. Fundamentally, the underlying, information gives us a trend. And then within the trend, we get all these movements. At the moment, I don't know which direction this pair is going. And the reason for that is, guys, is that it runs flat. It drops and then comes up, and it drops and then comes up, and it drops. And at the moment, we're up near the top of that range, and therefore I'm a little bit wary of trading it long, but I'm not brave enough to trade it short. I've traded this for years, guys, and caught quite a few of these spikes. Even look back there, Aussie New Zealand long idea. Now, it probably won't show us this. Oh, it did. Will it run? Oh, it did run. Now, you can see here the timing of these things. From there, I said it was going to go long, and this is on a daily time scale, guys, so you would have made money in that. But then it came right back down again, and then up it went again. We hit the target, but we didn't get there until way over here. So, it shows you that you can get the analysis right, but the timing's the next part of it, guys, and that's where you need to just be a little bit patient and try and get the timing right. Look at that. Not beautiful. Look, that's how it moves. Look at some of those. You look at that and you think, well, that's done, but look at some of these moves, guys. Look at that one. Now, I'm not suggesting that that's going to happen, but my goodness, there could be more downside to this. I don't know at the minute, so let's just leave it alone. Remember, only come back yesterday, guys. We're just building up a picture here of what's going on, and as we start to get a better idea of what's going on, we'll start to see more trading opportunities. And the way it works, for those of you who, anyone who's new, the way it works is that often you'll go, no, don't fancy that, maybe, and then bang, in 2 or 3 days, there's the trades, bang, 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 bang. So you just need to be patient with it, folks. Swiss yen, moving up quite nicely there in the 1 hour time scale. Let me just pause this a second, guys. Oh, where's my pause button? Okay, so let's get out a little bit into, say, 4 hours. I've had a lot of fun and games with this recently, folks. I haven't managed to make very much money out of it, but I was trying to trade it short through here. I spoke about this yesterday, but when it made that breakout, I just thought, well, that's it, I'm out of this. But the amount of people on eToro who were trading this short from here was scary, guys. Really scary. It just showed you that they didn't really understand what was going on. That was a breakout, And the reason that we were all trying to trade it short from this sort of level was because for since 2017 it hadn't broken that level. And if you look at these were the trades everybody was trying to catch, including myself. I mean, I caught a little bits here, but it didn't go in the end. And then I drew that channel and said, listen, this is something different. And then I gave up on, and then it broke out. And at that point I said, well, I wasn't brave enough to trade it long, but I certainly wasn't going to try and trade it short. But there was something 90% of people on eToro, 90% of people who were trading it long at that point. And I just thought those guys are all going to lose their money. And a lot of them will have lost money up through there, guys. And then we got this. Now, so is that the new top? That's the thing we need to have a think about, particularly since gold is, well, it's not doing what I would like it to do. Obviously, it's not going to do what I want. But I would, when we started to get this move, this is what broke the Swiss out. You see, What was that timing of that? That was around about 1st of August. Let's go back to that chart. And I'm doing this to show you the link between things, guys. Where was that breakout? It was here. 26th of April. Oh, nothing to do with that then. What was going on with gold on the 26th of April then? Was it that move? Nope, that was in November. Let's just look for the 26th of April, guys. March. May. April. Must have been that breakout there then, guys. It was that breakout that pushed the Swiss up through. Or the reason that went long was the same reason that the Swiss went long. It was a move into safety. 26th of April. Let's have a look at what happened in the Nasdaq on the 26th of April. It's October, February, March, April. It went up as well. No link there, guys, but no harm in having a look to see. Okay, so let's move on. But keep a close eye on that, because if I get a feeling that the yen is going to continue to strengthen, possibly would get another leg down there from that zigzag to see it, guys. But I don't know yet, so leave it alone. CAD. Ooh. Is this going to continue flat? If so, then there's a possible trade there. Euro USD, I hope that's moving in the right direction. Yeah, it is, but it's nothing much to write home about, guys. It's just about hit it. Okay, well, at least it's not going in the opposite direction. CAD Swiss. Yet again, I'm not going to jump into it, but over the next few weeks, we'll keep an eye on it. If I see a trade, I'll take it. CAD Yen. It's going to be the same with that one, guys. Let this whole structure here develop a little bit more. There's potentially some upside to it, provided the yen doesn't continue short. New Zealand yen, we're also getting that little pullback there. There's a structure in there, potentially. See, that's a structure. That structure is now finished. This is the next structure, guys. We're looking at structures. And then we're looking to say, well, is that structure going to continue? And when it breaks, is it going to break out long or is it going to break out short? So we're looking for a change of structure for our trend. And obviously there's an overall trend. If you go back out, well, the overall trend was up. But if you look at that period of time there, guys, don't be surprised if you're not getting something like that. Now, there's something there that I've just noticed, which may or may not be something. And I do not trade things like this, but you're aware of them and you notice them. There's a potential head and shoulders in there, guys. Prices come up, shoulder dropped, come up, head dropped. We're potentially in here, another shoulder, guys. So that may well drop like that. But don't trade it because it looks like that, because it doesn't always work out. Trade it because you understand fundamentally that that's the direction it should go in, and then it's about looking for the right setup for your timing, guys. So I don't know if that's going to happen, but looking at that overall, it's kind of making me think, you know what, I'm looking for the yen to go long. There's a head and shoulders in there. You never know. There could be a trade in there, but not yet, not today, not till we see the setup. But it's in my head now. So on Monday and Tuesday and Wednesday and this time next week, that's going to still be in my head until it doesn't happen. Or it happens and I miss it. And then we'll stop talking about it. Okay. New Zealand CAD. It's been in this big drawdown here for quite a while, guys, but I suspect it's coming into the bottom of it. Now, ordinarily, I just scribble these things, guys, because it saves time. That's why you'll see me doing stuff like that. If I do that, that's what I'm trying to indicate. Is this the bottom off and it's starting to want to break out? Possibly. Possibly. Just the oil price would have to drop, and I can't see any reason for the oil price dropping, so just don't be trying to trade that. New Zealand Swiss. Yet again, it looks like it wants to do that, but we'll have to just give it a few days, guys. Don't worry. The trades will come. They'll come. And that's just GDX. I've nailed on the bottom there. That just follows the gold price. You know, if you go and look at the gold price, it overlaps that exactly. Go and look. Let's have a quick look at the gold price, and that'll do us for today. Where's the gold price? That's silver, gold. There it is. Impulse, correction. What I thought was a breakout and not a correction of that. I'm hoping it is a breakout. I'm hoping this is going to turn out to be an impulse up. I'm not saying that's what it is, guys. It's kind of what I'm looking for. That's the reason I've got near 10% of the account on gold. And if it turns out to be wrong, then I'm going to have to lick my wounds for the rest of the year and try and, rescue the situation. But we'll see. We'll see. Okay, guys, that'll do for the day. It'll do for the week. I'll speak to you all again on Monday. Remember, if you want to leave comments or ask questions, just don't be a smart aleck. Just ask decent questions, respectful questions, and I'll answer them gladly. Okay, bye for now, guys.